Philip, welcome back. Jeffrey Dean, good to see you. Good morning, Miss Jen. Always a pleasure. Hope you guys are doing great. Hope everybody's happy. Guys, I'm going to test drive a new PowerPoint on you today. Hey, Steve. I just built it this morning off of a document that I built over the weekend. So we'll see how it goes. Be patient with me. I'm not the sharpest tool in the shed, but I'm pretty good at patterns. That's what we're going to talk about today. We're going to talk about advantages. I got a private message. I don't usually call people out, but Ron was like, hey, can we talk about the high probability trend trade today? And I said, you know what? I got you. So that's what we're going to do. I'm in a great mood. I hope you guys are too. But we're checking news first, right? That 8:30 high impact. Holy smokes. All sorts of movement. I was playing around on my TradingView account right when news hit, and I was laughing so hard I sent my brother this picture. That was one bar, start to finish, entry to exit, $250 trade. It was kind of funny. But the reality is I don't want to get caught in that sort of emotional thing. I personally, in my own life, I don't trade news. I sit out. I would never risk real money when a market can be that emotional. So I go to forexfactory.com/calendar each and every morning, and I look for the red boxes, which are high impact, and I look for the orange boxes, which are medium impact. And to me, that's enough of a red flag to just walk away, to go get a new cup of coffee or scratch the dog behind the ear, do something. At 10:30 a.m., we will have crude oil inventories. If you are a crude oil trader, guys, this may as well be a red box. This is when they release, I think, the reserves. And there's always some Yahoo with a big bank account that reacts to it. And just no reason to be a part of that reaction. So every morning, it's the first thing I do. And then I say good morning to the Nexgen page, because this is where all the answers come from. This is where everything that I talk about comes from. All the things that make me look smart, they're not mine. I stole them right from this page. There's two sections under education. I think it's important that you know where both are. So there's the software guide. This is your NinjaTrader how-to, guys. So if you're brand new with me, if you're getting acclimated to NinjaTrader, this is where most of your answers come from. It was a relatively small class today. The other one is the trading guide. Yeah, we're going to do it again. And the trading guide, I don't know. I think I have a virus, damn it. The trading guide is where we talk about indicators, momentum, terminations, entry areas, everything. Everything that gets tied together to produce the high probability trend trade, guys. And ready, here we go. New PowerPoint. This is so exciting, right? Boy, that's bright. We're going to talk about a high probability trend trade this morning. We're going to focus on it exclusively, because this is the beginning. This is the foundation. This is the base, guys. And this high probability trend trade is a high probability trade, obviously. And a high probability trade is defined when each indicator on every chart agrees with the rules for the trade, guys. Typically, this is when all the triggers are their strongest. There's no terminations. And there's no trouble spots between your entry and your target. I focus on this one trade for an entire hour because this is a trade that typically wins 70 to 80% of the time when you follow the rules. That success breeds confidence, guys. There's that old saying, confidence comes from the memory of success. The most important thing that this is going to do for you, let's get my super duper laser pointer. Pew pew. And I'm probably going to have to rebuild these charts. They're a little wonky, guys. But this high probability trend trade is going to teach you to read your indicators. And this is my goal for everybody in this room. I want you to focus on being a chart reader first, because you're going to talk to yourself about advantages. You're going to say them out loud. The people that live in your house are going to know exactly what you're looking for, because you're going to be very vocal about what it is that you're looking for. And chart reading is about 90% of your day. There's a lot of time doing nothing in the markets. There's a lot of time sitting on your hands, twiddling your thumbs, playing solitaire, whatever you do, other than taking trades when you don't have an advantage. Once you get comfortable with your chart reading, once you can identify a couple basic concepts, you really will understand where the market is likely to continue. This will be your entry for the highest probability trend trade. You'll understand where the market is likely to go. This is going to help you with profit targets. And finally, you'll understand where the market is likely to stop. And this is going to be that big waving red flag that just says to you, man, go do something else, because this is an area that may stop the market. Those likely to stop areas are what we call termination conditions. This is the one that is the most broken rule that we have, because that's the one that is going to force patience, guys. These three rules are all it takes to get into a trade that typically wins 70 to 80% of the time. Each rule provides an advantage when true, and let's be clear about that. When true, right? If I don't have strong triggers, I certainly don't have the advantage of momentum. So you've got to know both sides. You got to be willing to say both sides. But when strong trigger lines, when I have them on my large chart, guys, I have momentum. I have a market that's likely to continue in the direction of the trend. And I have the strength to potentially break key Fibonacci areas. And guys, strong triggers cover a lot of mistakes that new users tend to make. My second rule, termination's false. None of those likely to stop areas in my way. This is going to give me room to my profit targets. And we're just going to call that a clear path, right? What's a clear path? Nothing in the way. I'm a huge fan of simplicity. And I think sometimes when people build study materials, they try to sound smart. Guys, I don't ever go that direction. I try to be clear, and just like the path that we need. So momentum and clear path. These are your core. These are your basics. These are the foundation from which your trading plan will grow. Once you understand strong triggers, then you go to learning clear path. And we're going to break them down like this individually. And then when these two are true and those advantages are in play, this is when you're going to look for your entry. This is when you're going to find that point where the market is most likely to continue with the trend. And that's rule number 3. It defines that entry area. And rule number 3 is specific to the high probability trend trade. It's designed for that trade. These 3 rules, again, not a smart man. I like to keep it pretty basic. These 3 rules are going to happen on only 2 charts. There's going to be a big chart and a little chart. How's that for technical? Your large chart, guys, this is a very slow moving chart. It's a very broad stroke of a brush, and it shows the overall opinion of the market. There's this large crowd that moves the market, and that's exactly who the large chart is. It's the men and women that establish trends and create momentum and reacted areas, guys. And your large chart on the most current bar, only one bar, will define direction, momentum, and areas. And I realize that I just left a picture out, and that's okay. We'll go through it. Rules number 1 and 2 are met on the large chart before you ever go to the second chart, which is the small chart. And the small chart it's a refinement tool. It shows the x-ray. Someone said that yesterday. It's just an x-ray of that one bar, the movement of price from the top of this bar to the bottom of this bar. You'll see all of it on the small chart. It's about 20 to 30 bars typically. And this will refine that broad stroke of a brush that the one bar on the large chart provides. This is how you're going to pinpoint your area for entry, that best of the best spot. This is going to allow you to reduce risk. It will allow you to increase your profit potential. And that's where rule number 3 comes in, guys. It is a small chart endeavor. And some of the brightest traders I know will tell you, even in this room, they'll say, don't go to the small chart until the large chart says it's time to look for an entry. We use these 2 charts, and I'm going to show you a picture because I forgot to put it into my PowerPoint. We use these 2 charts because they really are. They're a reflection of who's in control of the market and who you are trading with or hopefully not trading against. Whoops, sorry. The large crowd is the big chart, and the large crowd defines the areas. They define direction. They define momentum. They create momentum. This large crowd are the people with a ton of influence and an awful lot of money, And typically, the path of least resistance is just go with them, go with the flow. There is a small crowd. This is our representation of on the small chart. And this small crowd loves to fight. They love to push, and they create these retracements, these little pullbacks that are counter to everything that the large crowd wants to have happen. Your rule number 3 on that small chart is designed to having you pinpoint precisely where their failure is most imminent, guys. And they typically lose 70 to 80% of the time, which means you have the potential to win 70 to 80% of the time if you just follow the plan, if you embrace momentum, if you go with that direction, if you're not trading into areas, and then you follow the simple rules to figure out where the market is most likely to continue. So we have the 2 charts. There's only 3 rules. We're going to break them down. But one thing I add in the morning is what are we looking at when we look at the charts, guys? There's 2 triggers. There's small triggers and large triggers. And you're going to see these on every chart that you're trading, guys. The small triggers are a fast-moving average, and they're the same no matter what time frame. It's 2 solid lines. And the large triggers are a slower moving average, and it's the same on every time frame. It's just 2 dashed lines that make those large triggers. But we're going to use the small and large triggers together to define momentum. And then we're going to use them in conjunction with areas. And these are the areas. You're going to see them on both charts as well. We're just naming them. This is your roadmap to what you're looking at. There are divergence high lines, and these are magenta lines that print off of pivots when there's a loss of momentum. If the market pushes up and then back down, creates a pivot. If momentum isn't following price, you'll see a magenta line from a high. You'll see a cyan line from a low. I want you to just equate. Divergence lines mean loss of momentum. There's red Fibonacci resistance. These are the red lines that'll print on your charts. Then when the market is trending up, they may behave as resistance. They could stop the market, create a bounce, reverse it completely. Blue Fibonacci support is the blue line. And when the market is trending down, this does the exact same thing but opposite as resistance. It may create a bounce or reversal. It may stop the market. You're going to see yellow 1-to-1s on your chart, and these are kind of fibs that print in the moment. And when the market's trending up, they can behave as resistance. When the market's trending down, they can be support. And then you'll also see this mid-band, and it's just a moving average that runs through the middle of the screen. When price is above it, it may behave as support, and when price is below it, it may behave as resistance. So a little just what you're looking at. This is the roadmap. These are your indicators. One of the great things about what we do, and John Novak has been saying this for 25 years, is you don't have to know how to build a watch to be able to tell time. Guys, I don't want you to wrap your head around how these came to be. I just want you to understand that we're going to use these when we're looking for 3 rules, and this is how you're going to get the advantage that you need to enter a trade. So let's start with rule number 1. Rule number 1 says that the large chart must have strong triggers, guys. The large chart defines direction. The large chart defines momentum. The large chart defines areas. So we're going to let it define direction and strength first. If the background of your large chart is green, the market's going up. There's your direction. This is the direction you should be looking for rules to be met to take that high probability trend trade. If the background is red, the market's going down. We're looking for rules to be met for high probability trend trade short. Guys, the rules are exactly the same, just inverted. And that's one of the great things about the futures markets is we can make money both directions. It's pretty cool. Strong triggers in an uptrend mean that your small triggers and your large triggers are both going to be green, just like the background. When everything matches, that's what it takes. But your small triggers, the solid lines, must be up and above the large triggers. And the large triggers must be wide, angled in the direction of the trend. And then it's the space that's created between the two. As those trigger lines separate, momentum grows. I like to picture scissors that are open. In a downtrend, small triggers below the large triggers, the space created, that's your strong trigger look. Those open scissors, guys. And when I have strong triggers up, the odds are favorable for the market to continue up. And when I have strong triggers down, the odds are favorable for the market to continue down. So you're going to hear in this room all day long, odds favorable momentum. You're going to see it annotated on charts, OFM. This is one of the things that I want you to discuss every time you present in the room. Talk about that momentum. Talk about those strong triggers. And then when the small triggers work their way back inside of the large triggers. Guys, this is a weakening of the large triggers. This is a slowing of the trend. And when I have weak triggers, anything can happen up or down. I'm a huge fan of really language and speaking out loud and convincing myself that I have the absolute best look, strength, odds favorable, or convincing myself that maybe I shouldn't be taking a trade with weakness when anything can happen up or down, guys. Weakness is when you begin to see bigger retracements. Weakness is when areas tend to hold. Weakness is when it's hard to predict. It's hard to find that winning pattern. So, rule number one is a large chart rule. Let's find the large chart and let's see what happened. That news spiked, didn't it? Separation between the small and large. Let's make that bigger. Guys, this is momentum from the opening of the scissors until they begin to close. And we're going to look for our opportunities inside of that range. Let's back up a little bit. You can see the scissors open, the separation, and there's that strength, and then strength to the downside. And then, guys, there's news. This is what happens when news prints. Look at that run. And look where it came from. It came right from a big blue line. Pretty outstanding. And what a great segue into rule number two. Could you guys give me a why if you're with me, if you're comfortable, if you feel good about it? Separation of the triggers means strength. The colors match. Everything looks the same. And guys, those scissors open. That's what pushes the market. Once we have momentum, and just a reminder if you came in late, this is a brand new PowerPoint, and I may have missed a thing or two, and if I did, I apologize. So I might bounce a little bit, but I will keep it simple. Termination conditions, guys. Termination conditions are defined on the large chart. Areas on the large chart. We have to make sure that there's none present. We have to make sure that none of these lines are behaving as a termination condition because we want room to our target. So we're going to make sure that that path is clear. Back to those areas, those horizontal lines on a large chart, guys. These are all of the areas that can behave as a termination condition. These are where the large crowd is most likely to make a decision. So defining a termination condition isn't really a difficult endeavor. We're going to let the large crowd get to the line, and that's price reaching the area. That's what sets off the decision making, whether price reaches resistance or whether it pushes all the way down and reaches support. When price reaches an area, all you have to do is ask yourself, where are my triggers? That's it. And if your triggers remain below resistance, small and large triggers, both lines of each, below resistance, resistance is a termination condition. This is an area that may stop the market. This is an area that may create a big, ugly, untradeable bounce. This is even an area that could reverse the market completely, making those large triggers go from green to red. If resistance reverses the market, guys, this is what we call a strong top. And a strong top is a precursor for the highest probability trend trade that you can take. And a strong top, typically the market moves further the other direction. And this is what sets you up. This is rule number 3 for at least 3 other trades that you'll begin to learn beyond the high probability trend trade. If that strong top pushes the market all the way down to Fibonacci support, all you have to do is ask yourself, where are my triggers? And yes, it really is that easy. If your triggers remain above support, support's a termination condition. It may create an untradeable bounce. It could reverse the market and become a strong bottom. Guys, you never know what the reaction is going to be. So really, every time price reaches an area, it's an opportunity to take an exit if you were already in a position, understanding where the market's likely to go. And it's also an opportunity to pump the brakes, to sit on your hands, to not hope things break or try to anticipate the roll, but rather simply let it happen. If this support is really going to stop the market and reverse the market, those large triggers will turn green. And if this resistance really will stop the market, those large triggers will turn red. But guys, areas break. Areas break all the time, or we would be trapped in a range. So I'm going to show you what it looks like as an area breaks. Not just a broken area, but exactly bar by bar what it looks like when these areas are breaking. So it starts with price reaching resistance, number 1 here. Big stop sign. Price reached resistance and all the triggers remain below, and everybody in this room said, all right, nothing to do for a minute. I'm going to wait for the reaction. This is a termination condition. It could bounce, it could roll, it could break. I don't know what it's going to be. Nobody sent me a memo. Guys, if those small triggers continue through, and this is an important lesson, once price reaches the area, the burden of definition is 100% on the trigger lines. If the small triggers smash through the area, but the large triggers are lollygagging, they're lagging behind, they're still below resistance, this is when areas have the potential to break with all of that momentum. And trades can be taken. I will give you a plan to take that potential to break trade. It's what we call a 50-50. 50% of your triggers break through, 50% haven't made it yet. And notice that I put a pause button on there because the area is not broken yet. This is not a high probability scenario, but this is definitely a trade that you will learn, that you will embrace, and that you'll probably see a lot during the day. But once the small triggers and the large triggers, both lines of each set, break above resistance, well, now resistance is considered broken. Now resistance behaves as support. Now you have momentum and a clear path. It's time to look for an entry because the rules are met. Now the path is clear, and it will remain clear until you reach the next line. And that's when the process starts over. So go in the other direction. When price reaches support, pump the brakes. What am I going to do? What's it going to do? Hell, I don't know. Let me do nothing and see what the reaction is. I see a lot of new users go, well, I saw a blue line, so I went long. Don't do that. Look at that momentum. Just wait. You'll know the reaction in a moment or two. If the small triggers, 50% of them smash through the area with momentum, but the large triggers don't, 50% do not, we have that 50-50 look, which lets me know that this area has the potential to break. Trades can be taken, but they have to be managed assertively. And then once the small and large get below support, well, now support is resistance. And the path is clear until you reach the next area. We'll see what happened after news, but this is pretty cool. Look at that. There's resistance lines. It breaks, pulls back, behaves as support. 1, 2, 3, 4, 5, 6, 7, 8. 8 times until they're able to get below it and give it the potential to break, but it doesn't. And they push back up right to a divergence line, which creates a bounce down right to support where the triggers don't break. And sure enough, that's where the market heads up, pulls right back to support, and it begins to rocket north. Isn't that awesome? You guys know about these lines, and of course that's a little unusual because that's right after news. But if you back up from support to resistance, it creates a big bounce. To resistance, it creates a big bounce and a fight to the divergence low, and that's when the uptrend starts. And there's opportunities in between the lines. Resistance breaks, behaves as support over and over. Resistance, set it off to the downside. Can you guys give me a why if you're with me? When price reaches an area and the triggers don't break, sit on your hands. Do nothing, guys. This is the one that keeps money in the bank. This is the one that keeps you from hoping, from wishing, from wanting, from praying. All you have to do is simply wait. They're going to tell you what the market's going to do. They're going to give you a very clear indication. And here's crude oil doing the same thing. Didn't break, pushed all the way to support, starts the move up. Look at momentum breaking areas, weak triggers at a fib, and now it's on the way down. I don't have to take pictures and go back and find the perfect look. It happens every day, guys. Every day it happens. So, rule number 2, guys, this is your patience piece. Because there will be times when the path isn't clear because your areas are stacked a bit. And this is 90% of your day. This is your patience piece. This is when it's okay to do nothing. The futures markets trade billions of dollars, guys. Billions of dollars every day. It's not necessary to be in every move. It's not imperative that you're the first person in because you see a line. And it's not imperative that you're the last person out because you're waiting for it to get to that line because you believe it has to go there. You don't have to be in every move. It takes $400 a day. $200 a contract a day to put yourself in 6 figures, guys. By the end of this classroom, you'll have everything you need to capture that. So, Rule number 1 says momentum. Gotta have it. Need those strong triggers. Rule number 2 gives me a clear path. None of those termination conditions in the way. Well, once I have those two, my large chart's done its job. Once I have those two, the large chart has done everything that I need it to do. And I have to turn my attention to a small chart, to a fast chart, to a refinement chart. And there's typically 20 to 30 bars on this chart inside of one bar on the large chart. And your precision is going to be so awesome that you're going to use a limit order. You're literally going to wait for the market to come to you. And you're going to use the limit order at an area, at a fib, at a mid-band, at a yellow 1-to-1. And you're going to let the area be inside of triggers. And you're literally going to buy or sell that pullback, that fight created by the small crowd at an area inside of triggers, guys. So your large chart is going to have momentum. And your large chart will not have reached an area. And you see these tails that form on that one bar? We're about to pinpoint precisely where that tail is most likely to form. And we're going to do it by going to the small chart, guys. So once the rules are met on the large chart, I'm going to turn my attention to the small chart to find my entry. And the first thing that I need when everything is screaming up is I'm actually going to wait for a down bar. I'm going to wait for a reversal bar. And this is going to be my visual. This is going to be my indication that the pullback is starting. This lets me know that the small crowd is beginning to fight. And the reversal bar is not my entry. We're better than that. Once I get my reversal bar, I'm going to identify where that retracement, where that push down is most likely to go. And guys, price returns to large triggers. And on my small chart, I have large triggers and I have synthetic triggers. The large triggers are smooth. These are native to the 5-1, and these are what we're going to use compared to the small triggers to define momentum. But I also have synthetic triggers. They kind of look like steps. These are nothing more than the large triggers from the large chart. Price returns to large triggers. So the retracement zone will go from the highest point of the trigger lines to the lowest point of the trigger lines. And this is just showing me, this is showing me where the down bars are most likely to go. And the tighter they are on top of one another, the smaller that range becomes. And this is going to help with accuracy. So the tighter these are, when they're overlapping one on top of the other, it's perfect. We call it favorable large triggers. But this just kind of defines the retracement area. This isn't our entry. Our entry is going to come from areas. Whoops. I need areas inside of favorable large triggers, guys. Areas can be fibs. Since this is a long trade, the fib needs to be blue. It could be a mid-band. It'll be green in long trades, magenta for short trades, or yellow 1-to-1s. But the key is that they're inside of triggers. You'll notice that these yellow 1-to-1s are not inside of triggers. And that big box that we had, the retracement is most likely to happen here. But the bounce is most likely to happen from the areas within, guys. So the box from the highest point of support inside of favorable large triggers to the lowest point of support inside of those triggers, this defines where the small crowd is most likely to fail. This defines where the trend is most likely to continue. Your job is to study a little bit, to develop some faith. Right-click on that chart and activate a limit order about 2 ticks above the highest point of support. Because remember, your large chart, there it is. Your large chart has odds favorable momentum. Your large chart has absolutely nothing in the way. Honestly, I don't expect that small crowd to get a ton of work done. So I'm going to enter 2 ticks above the highest point of support. And if the market comes down there, I'm in a long position, guys. I've bought the market, and I have the advantage of a market where the odds are favorable for it to continue up via strong triggers. You have the advantage of a clear path, giving you room to targets because no termination conditions were present. And you have the advantage of having entered, gosh, I need to fix these pictures. Precisely, let me cover that S where it should be a D. Precisely where the market was most likely to continue with that uptrend, guys. This is your high probability trend trade entry. All we've done so far is talk about entry. So this is kind of the whole thing in one picture. Large chart rules are met. Odds favorable momentum, clear path. We're going to wait for the reversal bar. Guys, if you get sucked into that fear of missing out, if you just jump into that market, this reversal bar says, hey, let's cut ties with that emotional trade and let's define the triggers and the areas and let's wait for the best trade, guys. So once the reversal bar prints, I define my triggers where the retracement is most likely to occur. And then once I have my trigger lines, I look for the areas within. Fibs, midbands, yellow 1-to-1s. The blue shaded box, this is my window of opportunity, guys. This is where the market is most likely to continue. This is where the bounce is most likely to happen. This is where the small crowd is most likely to fail. Your job is to activate a limit order, couple ticks above that highest point of support, and then sit on your hands and see if the market gives you an entry. Once you can define where the market is most likely to continue, you're already on your way to management, because the market shouldn't go below that retracement zone. The market shouldn't go below those areas inside of favorable large triggers. And if it has, rule number 3 advantage is no longer with us. The market, the small crowd is pushed. Anything beyond the triggers, on the wrong side of the triggers, is not a part of the window. And this is actually where the market should not go. And those words become important because you're going to use that concept for stop placement when it's time for management. So in a downtrend, when I have momentum, when the path is clear, I'll wait for a reversal bar. The reversal bar signals the beginning of the fight. It signals the beginning of the retracement, the pullback, whatever you want to call it. I need to see where's that retracement most likely to go. It's most likely to go to the trigger lines, large and synthetic. The tighter they are, the smaller that area. And then I need something for the market to bounce off of inside of those trigger lines. Fibs, midbands, yellow 1-to-1s. And guys, there is one line inside of triggers. This defines where the bounce is most likely to happen. Your job is to activate a limit order 2 ticks below that area and say, come on, small crowd, come get me. And if they get you, you're in a short trade with every advantage. Anything on the wrong side of the triggers, any line on the wrong side of the triggers, guys, this is no man's land. You have absolutely no idea if they're going to stop the market or if they're just going to continue right through, maybe to an even higher time Fibonacci area. You'll also notice right here, you got a reversal bar and it didn't hit your area inside of triggers, guys. The precision of this entry, it keeps you from having to chase trades. Let the market go. It's okay. They typically come back. You typically get your entry. So by defining where the market is most likely to continue, you understand where the market should not go. And your initial stop, this is management. Your initial stop will go 4 to 5 ticks beyond the trigger lines. 4 to 5 ticks. So sometimes your stop may be 5 ticks. Sometimes it may be 15, guys. But the recipe is always 4 to 5 ticks beyond those triggers, because if the market pushes beyond the areas, beyond the triggers, you don't want to be in that trade anymore. Your advantage is gone. So 4 to 5 ticks is an initial stop placement. But here's the great thing. 70 to 80% of the time, typically, you're going to get a reversal bar in the direction of your trade. We call this a confirmation bar when the rules are met. It's confirming that the market is going down with the trend. It's confirming that the market is going down with momentum, that it's going down with that clear path, or up, depending on which direction you're trading. And your new stop will go 2 ticks above it, or 2 ticks below it. And guys, it is not uncommon to see Nexgen users take amazing entries, almost sometimes the high or low of the bar, and once that reversal bar prints, having maybe 2 or 3 ticks of risk. And ticks are the smallest increment of market moves. 2 or 3 ticks of risk on a short trade. 2 or 3 ticks of risk on a long trade. And it doesn't guarantee the winner, guys, but a $30 or $40 loss is very easy to recover from when you're taking a high probability trend trade. So you're going to need to study. You're going to need to learn this look. You're going to need to learn this pattern. All it is a pattern that's been proven to win more than it loses, guys. There is strong triggers. That's important. That's rule number 1. There is a clear path, or at least the potential to clear. Rule number 2. And then there's that pullback to areas inside of favorable large triggers. I want to show you something pretty amazing here, guys. At the top of the bar, where you guys make the decision, I need an entry. You have 8 ticks, $80 in crude oil to get to that next termination condition. And there's a lot of you that are going to say to yourself, man, I can't do that. I can't take a trade for only $80. This is where precision pays dividends, guys. We're not entering at the top of the bar. We're letting it pull back. There's your pullback inside of the bar. That's what creates the tail. And now suddenly that 8 ticks turns into 38 ticks. That $8 turns into $80 turns into $380. And that tiny little gap to trouble grows exponentially, guys. And you don't even get the next bar until it breaks that high. So we don't trade tails, we trade pullbacks. It reduces risk, it maximizes profit potential. And if you go back on a large chart with the rules met and you circle those tails, this is how you're going to study, this is how you're going to build a little faith. You can say to yourself, did that circle or did that square line up with an area inside of favorable large triggers? And if it did, guess what? That's your pattern, guys. That is your pattern. So let's take a look. There's momentum and path. Let's circle a tail. What did that tail look like? There's your pullback to support inside of triggers, and it did it again. The mid band right at the base of the triggers. It did not get 5 ticks below. Pretty cool, right? What happens if we just start playing the tail game? That one almost had the potential to break. Right at support, right at the top of the triggers, didn't break below the triggers, guys. You can use this to develop a little faith in this pattern. You can use this to develop a little trust in the methodology. You can use this so that you can recognize these patterns quickly and you know exactly what you're looking for before the market ever gets to that area of resistance inside of triggers. Guys, this is your high probability trend trade. This is the best of the best. This is your foundation trade. So one of the things that I tell my class every day is that I'm going to give you everything that you need to be successful with this software. We've just learned the trigger line and the Fibonacci rules for when it's okay to trade. We've broken them down individually. We've talked about what they mean to you. We talked about what they look like, the order of operations, and where to find them, guys. You have the ability to simulate and to practice and to do this trading over and over in a risk-free environment. And that simulation leads you to the first step in becoming a confident trader ASAP, guys, and it's posting your trades in the room. And you'll notice that there's a lot of people dropping trades in this room right now. And they're doing it and they're talking about what it is that they see. And they're talking about why they did what they did. And they're talking about, this is my trade and this is where I did it and this is how I did it. And guys, this opens the door for a private session. Every time you post in my room, we will talk about what you saw. We'll talk about what you did. We'll talk about where you did it, guys. So there is a way to get the absolute best feedback in this classroom. And it's talk about those 3 advantages with every trade that you post. Talk about momentum. Talk about whether or not you had a clear path, whether it was only the potential to break, or even if you were trading into a termination condition. And then define your entry. Use the words, I entered in an area inside of triggers, guys. And what this is this is letting me know how you're reading your charts. This is letting me know if you understand these concepts. And the great thing is if there's a mistake, if there's a misread, we're just going to work together. We're going to go back to the lessons and we're going to fix it. So simulate, practice, but don't skip posting in the room. Win, lose, or draw. And guys, losers are the best because losers are what we need to correct, guys. And that kind of takes us to the second thing. We are simplifying. We're only going to talk about this one trade initially, the high probability trend trade. You need to know what looks you're going to commit to. You need to understand the patterns. And you need to be able to see them so that they become easy. And once you recognize the pattern and recognize it quickly, it's almost as if the market slows down. You begin to anticipate what it's going to take to get you into the market. And that's the second piece of the puzzle, guys. That's make sure that you're using your spreadsheet. Make sure that you're taking every picture that you take and dropping it into that spreadsheet that Nexgen gave you when you downloaded software. It's the same spreadsheet that I just dropped into the chat box right now. And there are 4 tabs, guys. There's a trade tracking tab. I think this one really pays dividends once you start to get into taking these trades, because every trade you take, you need to take a picture of. And every picture you take, you need to talk about the advantages and talk about your entry and talk about your management, and post it into this. And there's a giant section, feedback from class, guys. Your job is to wake up tomorrow morning and to look at these pictures from the trades you took today and to ask yourself, what worked? Right? What's the pattern that's bringing me success? What's the pattern that keeps me calm? What's the pattern that just I feel good about? And that's what you're going to focus on that next day. You're going to focus on all the victories that you had the day before. But you're also going to recognize, because we're brand new and we make mistakes, you're going to recognize things that maybe are hurting you, that are taking that success. If you look at my sheet here, you'll notice that 3 times in a row it says end of terms. 3 pictures that I posted in the room, each one of them got the feedback you're trading into a termination condition. That's probably where your loser came from. So I get to also wake up that morning and focus on not trading into termination conditions. And I promise you, if you post those trades into termination conditions, we're going to talk about the recipe over and over and over to make sure that you can fix that. The second tab, these are the basic rules. These are the high probability trend trade rules in green. What it means, what it looks like. Each chart is annotated describing it so you know exactly what it takes to have that rule met. Then there's also the opposite. And each opposite picture is annotated describing how your advantage is no longer present. It's important that you know both sides of the coin, because, guys, one of the things that you're going to want to do each and every day is you're going to want to commit to having your rules met, because rules are based on patterns that have been proven to win more than they lose. And if you can look at your chart and you can say to yourself, I have a statistical advantage, this is the pattern that wins more than it loses, you're going to have that confidence to get in and to manage it appropriately. There's the client trade section. And this client trade section is almost 400 pictures of you guys using momentum, path, and entry to get into the market. There's management things, there's patterns that repeat themselves, there's the entry sequence, long and short. Just so you know the process from reversal bar all the way to limit order. Some of you are adrenaline junkies, want to trade the NASDAQ. I keep dropping some NASDAQ tidbits in here. You have the spreadsheet, look it over. Feel free to ask me NASDAQ questions. But if you're brand new, the NASDAQ typically trades about 10 times faster than crude oil or the S&P, and it's very difficult to follow as a new user. And then the final tab, this is the one that you'll use for years. This is your personal trade setup looks. This is where you're developing your trading plan. One of the great things about trading is it's a solo sport. It's not, do we get in here? It's not, should I take profits here? It is, my plan says, guys. So you're taking pictures of your perfect pattern. You're taking pictures of your management strategies. And you're taking pictures of the patterns that you begin to recognize when you become a chart reader. So using the spreadsheet is a huge part of getting to where you want to be. Posting your trades in class is an even bigger part to getting to where you want to be. So I'm going to give you guys some gifts this morning. The first one is Chart Reading 101. And I'm also going to drop this in there because this is the new one. That's the high probability trend trade PowerPoint that I used to teach the class today. And then there is the trend trade simple Word document that the PowerPoint was built off of. So you have everything there. This is Chart Reading 101. And in order to get to where you want to be, you really will have to learn these patterns. You'll have to understand momentum. You're going to have to understand clear path, and you will have to define entries. So this is an exercise designed to get you there sooner than later, guys. And it's all pictures. Take 25 pictures of strong triggers. Take 25 pictures of weak triggers. Know the difference. And if you do that, you're never going to trade without strength unless you choose to trade without strength. Same thing with the clear path, termination, and entries. But the task isn't to just ask why, guys, or to take pictures. It's to define the whys. Why is it strong triggers? What does it mean to me? Why is it a termination condition? What does it mean to me? And that's where the 101 section, the basic rules section is, guys. If you take a picture of strong triggers, and I click on that picture, it's not just the separation. It literally says strong triggers, smalls above large, all green, momentum, rule number 1. I've gone through the process of the visual and the verbal, and now there's a connection between the two, guys. There's definitely a little neuro something going on there. So if you do that for every picture, it reinforces the looks and the advantages, and then ultimately you'll piece these together to create a trade. You'll go through and you'll take your strong triggers and you'll pair them with a clear path, and you'll define the beautiful entry. Until you have the repetition and you've taken some of these pictures and you're comfortable, I've given you a little cheat sheet. This is the high probability trend trade checklist. This is actually a checklist designed to get you into the trade. And the second page is the actual checklist. So is the market coming from a strong top or bottom? This isn't mandatory. But remember that a strong top or bottom is the precursor for the highest probability trend trade that you can take. It's a wonderful advantage to have, and it's simply a no triggers through termination that reverses the market. And notice that I said termination. I didn't say a Fibonacci area that reverses the market. I didn't say a divergence low that reverses the market, or even one-to-ones that reverse the market. It's simply a termination condition that makes those large triggers go from red to green or green to red. And if it's not coming from a line on a large chart, it's not a strong bottom. You've got to be able to define momentum. It's the same look. It's open scissors. It's separation, whether the market is going up or down. Weakness is always weakness. The small triggers are inside, no matter what chart you're looking at. You need to be able to define termination conditions. If no triggers are through the area, it's not broken. There is no clear path. If the smalls are through but the large are not, as long as you have momentum, it has the potential to break, but areas are not broken until the small and large get above the resistance or below support. That's when the path is clear. And then how to define your entry. From the reversal bar all the way to the limit order, exactly what and where you're looking for it, guys. So as you go take those pictures, compare them to these pictures from the manual that show you exactly what it means. And then the second page is actually a checklist that you can print out, that you can put on your desktop. There's people that actually laminate this and use a dry erase marker so they don't have to kill a million trees. And it just asks the questions that you need to be able to answer yes to have the best of the best, guys. And I've never had anybody answer yes to all 4 of these and do worse than 70%. And I mentioned this yesterday, I'll mention it again today. I've had some engineers go through and back test this plan over the course of about 400 days and come up at around 82.3%, I think was the final number. So I'm going to give you that as well. You will get everything you need to be successful. And guys, I'm going to give you a plan. I'm going to give you a rock solid plan based on everything that we've spoken about so far. This is the KISS plan, the Keep It Super Simple plan. And this plan is a stepping stone in your learning journey, guys. It's designed to optimize your chances of success with the high probability trend trade. And then just a little peek ahead, it's also designed to optimize your chances of success with that 50-50 trade. So you're getting both of these trades, but it's important that you know this one first, the first one first, guys. Through simulation, study, class feedback, and continuous practice. Yep, you have to do your part. Guys, when you can read your charts, when you can recognize advantages, you'll most likely change and grow your plan. You'll find your trades. You'll find your plan. You'll find what sticks out to you. But until you can do that, until you can identify advantages and take the high probability trend trade, this gives you something to follow. And the simple plan for consistency says don't fight the large chart. Don't fight the momentum. Don't fight the direction. Someone said yesterday the trend is your friend. It most certainly is. Don't trade into those areas where the large crowd's most likely to make decisions, guys. If you can just do this, you're probably better off than about 70% of the traders out there. And then you have to define your entry. We've spent nearly 40 minutes defining an entry, guys. Great entries create manageable trades. And once you're in that trade, that's when you're going to pucker a pleat right in your favorite leather chair, guys, because now you have something to lose. Now you have risk. Now you have a market that's moving and you're watching P&L go up and down. And this is where the adrenaline kicks in and the palms get sweaty, guys. And your management as a brand new user should be every bit as mechanical as your entry. Your management as a brand new user should be if then. And the management plan in the KISS plan is designed to have you learning how to put your stops in the correct spot, but more importantly, it's designed to get you paid. And it's based off of 2 contracts when you enter the market, guys. And you will make your own plan based on your experience reading the indicators, but until you can do that, this plan keeps you focused on correct stop placement, and it keeps you focused on getting paid. And that's the goal of trading. So your very mechanical management plan from the KISS plan is 100% dependent on you getting into the market where the market is most likely to continue. Because once you're in there, that's the best of the best, guys. And this is where you have the least amount of risk. And your initial stop, and again, your ATM strategies will have a 12-tick stop predetermined for you. 12 isn't the answer. The answer is 4 to 5 ticks below those triggers where the market should not go. And sometimes it'll be 7 or 8, and sometimes it'll be 15 or 16. You can decide whether or not you're comfortable with that risk because you'll know where it needs to be before you ever enter the trade. If I take the best entry, then my stop goes here. And it's either going to stop me out, normal part of a positive equity curve, 20 to 30% of the time, it has to stop me out. Otherwise, it can't win 70 to 80% of the time. But more often than not, you're going to get that reversal bar in the direction of the trend. You're going to get that confirmation bar. That confirmation bar that tells you, hey, we're going up with the trend, with the momentum, with the clear path. Everything's doing everything you hoped it would do. Then you will move your stop 2 ticks below that reversal bar. And then you'll wait. And you'll either get stopped out for a smaller loss, or all that momentum pushes you to your first target. And your first target is only $100 away from your great entry. And there are a lot of people that poo-poo at a $100 target. $100 ridiculous. $100 doesn't make sense. $100, well, I can't even buy a nice steak for $100. Guys, this is one trade. This is a fraction of a moment in your trading day. And that $100 creates confidence. And that $100 is success. And that $100 goes into your account and they can't take it from you. Remember, you're learning how to get paid. And once that first contract comes off at $100, you're going to go to break even. You're going to take 100% of the risk off your trade, because you've got to remind yourself and you've got to remember that the only reason you entered at that area inside of favorable large triggers is because your large chart had all the momentum and nothing in the way. And the anticipation is that they make that next area. So you're going to have no risk, and you're going to learn to trust that large chart a little bit. And it's either going to hit your second target or you're going to be out of that trade break even. But if it goes to your second target, again, our goal is to get paid. Our goal is to make money. Our goal is to be consistent, guys. That second target is $200 away from your amazing entry. And you will create your own management plan based on your ability reading the indicators. You will begin to recognize patterns when you can hold for bigger moves. But until you can do that, get paid. And guys, $300, if that's the best you do every day, and your account doesn't know if it was $300 in break-evens or if it was one high probability trend trade that went the distance, but $300 a day, only $150 a contract. In a market that moves billions every day, guys, that's 75 grand a year. Tack in one more break even in there. You're at 6 figures. Your job is to study this a little bit, to prove me wrong, to tell me, Mark, you're full of beans, this will never work. I'm going to go circle those damn tails and show you. If you do that, you'll see the potential for 6 figures within the first couple days, right? But then you have to practice. You have to work on it. You have to learn these patterns. You have to ask some questions. You got to take some pictures. You got to fill out some spreadsheets, guys. Commit. And then you're going to say to yourself, all right, I got this. I'm ready. Let's do it. And there's 2 things that you need to know before you go live. It's okay to stay on simulator for a week. It's okay to stay on simulator for a year. But once you're comfortable, once you're ready to test your plan, you need to know why you're going to enter the market. Because rules are based on patterns. And these patterns have been proven by you through study to win more than they lose, which means that every time you enter the market, you have a statistical advantage. You have a pattern that has been proven to go the distance. And then your exits are nothing more than your advantages going away before targets are hit. So you'll have a solid plan. This is what has to happen for me to exit my trade. It's either my profits reached or hitting my break even or my stops where the market should not go. And guys, once you have rules that have been proven, once you have rules that have been verified, once you trust your rules, it helps remove the emotion associated with trading. And even more importantly, you don't have to know what's going to happen next. You don't have to hope it's a winner, because you know that if you take the same trade 10 times, you're more likely to get 7 or 8 winners than 7 or 8 losers. It helps remove the emotion. So this sheet, and I'm going to give it to you. If I'm in a trend trade, I have a set of rules to get into the high probability trend trade. I also have a KISS plan to get me out initially, and then I may find reasons to manage differently. I may just stick with the KISS plan. But once I take that 50-50 trade, once I add it to the mix, it's a different set of entry rules, and it's a different set of exit rules. Same thing with momentum trades, HVA trades, white bar trades, whatever you're doing, that chili dog trade that we always see. Guys, each trade is unique, so get really good at one thing before you go chasing everything else. So I always tell everyone, I'm going to give you everything you need in this classroom to be successful. And I mean it. So we're going to backtrack and we're going to talk and then we're going to take a break, guys. We have rules that have been proven to win more than they lose. You have working software with a simulator to practice these rules. You have the ability to post in this room. You have the ability to ask every question that crosses your brain. You get feedback and you get coaching on how to do it better if that's what you need. You have a spreadsheet. And guys, I have worked tirelessly on this spreadsheet. I have given you a trade tracking opportunity to go through, to talk about it, a place for feedback. I've already given you almost 200 pictures of rules being met and not met to start the study process. Nexgen clients have given you almost 400 pictures to use for training, entries, exits, management, NASDAQ, patterns, everything. And you have a spot to build your plan. The only thing that you don't have right now is the repetition, is the trust, is the time in the seat, guys. That's it. That's what the next 2 hours are. The next 2 hours are devoted to momentum, path, and entry, reinforcing rules, looking at trades, offering feedback. And if you want the best feedback, you have to do this for me. You have to talk about momentum and let me know whether you saw strong triggers or weak triggers. And it doesn't matter to me which one you have. I just want to make sure that you can read it. You need to talk about your path. Was it clear? Was it the potential to break? Or were you trading directly into a line that could have stopped that market? And then show me your entries. And guys, I love it. Everybody loves to show me their entries, especially on losers. They omit the exit. Guys, I want to see your entry, and I want to see where you got out. Tell me where you did it and why. And let's make sure that you're doing it the best of the best that it can be done. So do me that favor, and I promise you, I'll give you everything that I have and rattling around my brain to make you a better chart reader every day. So are there any questions before we take that first break? Let's scroll and see what the market's been doing. Well, there was momentum and potential to break, and it pulled right back to support inside of triggers. Damn it, this stuff works. I love it. And we ran out of fibs because of that big one. Look at that mid-band hold, and look at those large triggers a full bar away. And guys, that's the gap theory. We'll talk about that today if you want to. Price returns to large triggers, especially when it's bouncing off of areas. I'll leave you guys with crude oil. It seems to be a little more exciting. They're trying to break through an area right now. I don't know if they're going to be able to. Neither do you. So let's sit tight and let's get some momentum on the other side of those triggers. Guys, are on the other side of those fibs. I'll be back in 5 minutes. Post pictures if you have them. Ask questions. When I come back, we'll start going through pictures in order, guys, from first to last. Every chart is an opportunity for everybody. Feel free to ask a question, no matter whose chart it is. And guys, there will be times when I turn your charts into lessons. It may not be for you, but it's such a great picture that I wanted to use it. Don't get your feelings hurt. If you trade into a termination and I go on a 3-minute rant about trading into termination conditions, if you can't handle it, don't post in the room. But the constructive criticism, guys, that's where we all get better. So I'll see you in 5 minutes. Stretch your legs. I'm going to scroll up to the very top of the room. We're going to start at the beginning and see what we have going on. Joel, you got us going. This is in the wee hours of the morning. Odds favorable, momentum. Everything says up. Perfect entry. Right at a mid-band. Inside of triggers. And look at that. Money, money. What a great trade, Joel. Nicely done. Nicely done. And then Jay, I love this, man. I replied earlier Are you in here? He may not be in here. He might check this later. Guys, this isn't high probability trend trading, but this is taking advantage of a market that has cleared an area and is on its way to the next area. Cleared an area, trading to the next area, clear the area, trade to the next area. Guys, understanding and trusting these fibs is a colossal advantage, and it creates this amazing opportunity. And it really just says, hey, be patient. Take it to here, and then get to the other side before you take the next one. All right, Joel, you have odds favorable momentum. You have a clear path, and you didn't break rules. I don't know what this means. Divergence on 13.2. It's not favorable large triggers. Divergence doesn't mess up a clear path, right, Joel? Not when it's high probability. One divergence doesn't phase you, but there is some definite indecision. And this is a great example of, guys, when those trigger lines begin to split, is it going to be the one-to-ones? Is it going to be support? I have absolutely no idea. And that is a huge amount of risk if your stop has to go where the market shouldn't. And it was too much risk. Joel, you put 4 points on it, but you weren't willing to put the huge risk, which I don't blame you, but that's still in your window. So I wouldn't say you broke rules. I just said that indecision gives you an opportunity to be a little patient, to wait just a little bit. And with that indecision, very often, I love the idea of a confirmation bar. I love the idea of forcing that market to go up in the direction of my trade. Because at least then, my stop, yeah. It's a great read. Another one. Everything says up. The momentum is good. The path is clear. Beautiful pullback. Awesome execution. So this is one of the things that I like to point out, guys. And I'm going to point it out using Joel's charts. And I want you to see the 3 charts posted. Whoops. Where was that first one? So, odds favorable, clear path, pull back to support inside of triggers, off it goes. Absolutely beautiful. Odds favorable, clear path, pull back to areas inside of triggers, off it goes. Absolutely beautiful. Odds favorable, clear path, pull back to an area inside of favorable large triggers. Guys, it fits the rules. So Joel, you don't even get to question whether or not you know how to do this. Now the next step is going, okay, when my entry area isn't perfect, when that range is huge, I'll just comment for a second. I'll sit for a second. And guys, the NASDAQ is a different animal. And Joel, once those triggers get close, it forces you into waiting for that close on the other side. Nice job, Joel. Great trading this morning. Great chart reading. And I think you did a great job following rules. 15-second chart can give you an idea how fast the NASDAQ can move. Yep, I saw that one. Why on earth would you look at the NASDAQ on a 15-second chart? Holy crap. All right, let's see who's next. Pete. All right, Pete. Strong bottom. So I like that. The first identification is, hey, check it out. I have a termination condition that reversed the market. I know because I paid attention to class, that's a strong bottom. That strong bottom gave me odds favorable momentum. Small separated between the larger wide, everything is good. And I want you to see something. You're pointing to the momentum down here, but the trade is up here. The trade is all the way up here. So you're looking at the potential to break. And you don't have the best momentum. And sure enough, it waffles a lot. Pete's pretty smart. Pete says, you know what? There was a pullback to the mid-band. There's confirmation, and then out at trouble. And guys, this is what happens when areas aren't broken. Look at that indecision. Bing, bang, boom, bang, bing. This is what happens when you don't have momentum to just rifle through an area. And Pete, great patience. You did awesome. And you took it. And nice trade. Steve Diego. Isn't that crazy, Gary? Sorry, I just saw your message. I did the same thing. 15 seconds, nuts, though. This is the one that I sent John this morning. That's a 1 minute bar. 1 bar. And the next one was 10 times bigger. Next one was 10 times bigger. All right, Steve Diego, let's see what we have here. He starts with bad management. As I exited, I saw that all triggers and momentum on the 13.2 and 5.1 pointed for good potential for price to reach the fibs at 78.09, which was the target all along. Get in just above support, inside, add on to it, it's so pretty, and you exited DT. What is DT? Divergence? Because divergence didn't print. What is DT? Double top. But it wasn't a double top, right? Can I discuss the language here? This is for everybody. Not a double top. That would say that the market went back down, right? Let's go find a double top. Whoops. My NinjaTrader crashed. So let's get NinjaTrader back up and let's find a double top. Guys, in order to have a double top, you have to actually have 2 tops. If the market is trading up, there's not a top. Does that make sense, Steve? You let potential talk you out of the perfect trade, right? My brother, and guys, Novak men are horrible at analogies. My brother used to say, there's always the potential that a plane will crash through your roof and kill you. That potential's always there as long as planes fly over your head, right? But we don't live our lives in fear of planes crashing. Ricky Valens did. He had the nightmare. But, so, when price reaches that area, there's no indication that there's any trouble whatsoever. There's no down bar, there's no divergence line, there's no fibs, there's nothing. All there is strong triggers. And I know that you mentioned that after, but I want to turn this into a lesson for everybody. Guys, we don't trade potential. We trade what our indicators are telling us rather than what we think they may tell us. Because once you throw your guts into the equation, once you throw your opinions into the equation, once you allow your fears into the equation, you take $360 instead of $800. So, Steve, it's a great trade. It is an absolutely awesome trade. And it's a good lesson for everybody. Guys, I always appreciate when you throw pictures in the room because it does open the door for lessons for everybody. All right, Pete. Directly into terminations with weak triggers. There was your first trade out at the 1-to-1s. And then you said, you know what, to hell with it. I don't have momentum. My path isn't clear. Let me trade directly into it. You'll notice that Pete didn't annotate that. He only talked about the winner. That's pretty normal. And Pete's got an amazing plan. He's an amazing trader. And guys, you'll make bad decisions every now and then. It's true. Sometimes you'll do it twice. It's true. No momentum, no clear path. First entry, stopped out. To hell with the market. It's going up, damn it. Stopped out. And then Pete says, wait a minute. If this is going to be a top, these are going to roll and create momentum. And that's amazing. Let me take a shot down and get my money back. Nicely done. Pete, great recovery. And I love this phrase, guys. Back when I was a kid racing motorcycles, or a young adult racing motorcycles, someone told me once, there were 2 classes in motorcycle racing when I did. There was the novice class, all the beginners, people without repetition, and there was the expert class. And I had an expert tell me once, He goes, Mark, the only difference between a novice and an expert, he goes, it's rarely lap times. It's rarely ability. It's the ability to recover quickly. And that's exactly what Pete did. Pete didn't cry about a loser. He didn't call his girlfriend and say, I'm probably going to need a hug tonight. He said, oh crap, there's a short trade. Let me take it. Let me make some money. And that's what happens when you become a chart reader. Guys, we all make mistakes. Everybody makes mistakes. I haven't met a trader yet that doesn't make a mistake every now and then, whether it's management, entry, whatever, but recover from it. It's done. It's rear view. And Pete, this is one of the greatest lessons you could ever give a new user. First, let the large chart lead the way. But second, don't worry about what has happened. Let's focus on what's happening next. All right, DJ. Divergence from the middle of nowhere. Hits a mid-band. Retraces at the large triggers as we expect it to. When it gets there, DJ, you didn't write anything on the chart, so I'm going to make it up. Correct me if I'm wrong. When it gets back to those triggers, absolutely nothing changes. The momentum is still down. The direction is still down. The path is still down. And DJ says, check it out. I'm going to get in at the pivot stop out right at the top of those synthetics that just got tested. And I'm going to ride it down a little bit, and we'll see how far this thing wants to go. And it's a beautiful trade. It's an absolutely beautiful trade. I love the way you did it. But remember, guys, if you want feedback, tell me why you did what you did. If you don't want feedback, I'll do exactly what I did. I'll talk about momentum. I'll talk about the patterns, and we'll see what we get. There's that same pattern. Look at that. Weak triggers all the way to support. And when price reaches an area and those large triggers are a full bar away, it's likely to close that gap. And it did. Right to it. Absolutely beautiful. Guys, this is a picture. This is the gap theory. And I'm going to do this. Pete, I hope you don't mind. I'm going to steal your picture. And I'm going to go to the client trade section. And I'm going to go to patterns that repeat themselves. And I'm going to put yet another gap theory picture in those patterns that repeat themselves. Because the market's just patterns. That's all it is. I love that picture. Thank you. That's going to make somebody a better trader one day. That's going to buy somebody a little bit of patience one day. All right. The king of momentum and path. The guy who got a lot of you guys doing a lot of stuff. You were going to take that exact trade. Which one? Long or short, Kurt? He didn't go long. To fill the gap, market flow didn't give you your signal. Right on. So you're saying you followed rules and didn't take a trade? Because your rules weren't met? Congratulations, Kurt. You're what we refer to as a mature trader. Don't force trades, just wait for the advantages. Love it. All right, guys, this is the chili dog. You're going to see this in the room a lot. You're going to see this in the room a lot, guys. It started off with this one dude, and he's like, you know what, Mark? I don't need your pullbacks. I don't need your high probability trend trade. I studied them, I learned them, I recognized the advantages, I became a chart reader, and I developed a plan based on my ability reading the charts. And guys, this is his plan. When he has odds favorable momentum, strong triggers, when there is nothing in the way, he gets below the previous trouble. He uses that momentum to capture little base hits. 110, 112.50. That's it. It is a quick jump, riding momentum before that potential retracement for the trend trade happens. I love this trade. I hated it in the beginning, but I love it because I studied it. I recognize it. And there's a lot of people making money with this trade. And guys, I'm telling you right now, you better be sending Ron some Omaha steaks this Christmas if you're funding accounts with this one. Great trade, Ron. Thank you for sharing that. This is the same trade that I taught my wife. Because when I studied it, when I really studied it, I was winning about 70% of the time with it. It's pretty cool. All right, Joel. Momentum. No clear path. You just jumped in. You still have a loss of momentum, and you held it, and you hit a termination, and you held it, and you got out at the area inside of triggers. I'm not sure what you did here, Joel. Don't have any rules for this trade because you don't even have momentum, right? Don't have momentum on a small chart. It can't be a momentum trade. It's not a pullback to an area inside of triggers. It can't be a trend trade. That was your entry right there. So you took a jump in. No, it's okay. Let's go through the whole thing. You decided to jump in hoping it would go for you. Cool. When it didn't, it turned into a trend trade, right? Pulled right back to support inside of triggers with momentum, and you hadn't hit the 1-to-1 yet. And you get paid at the 1-to-1. And that's where I think maybe you just gave it all back. So you might have come out of this one negative or close to negative, or maybe that's break even. Break even. So good job, right? Understanding expectations. Joel said, hey, if I'm going to jump in here and it retraces, that's the most likely point for a bounce. Let's just keep my stop in place. There's nothing wrong with that, Joel. As long as that was your thought process. Nicely done. Steve Diego. It's more fun to say Steve Diego than just Steve, I'm not going to lie. Odds favorable. Everything going up. There's that chili dog. Bingo bango. Did you clear the area? I can't tell. It's hard to tell there. It did clear? Awesome. Nicely done. Nicely done. Can we use Steve's chart for a little why? When he says cleared trouble. Let's do it, right? Let's have another lesson. We won't even use your picture, Steve. Let's go back to a live market. Whoa. Does everybody remember when we talk about fibs, when we talk about 1-to-1s, when we talk about divergence highs and lows, these are where decisions are made. And this is a lesson that's easier to give after we talk about entries, guys, because these tails are fluctuations. These tails are the up and down on a small chart. And I want you to see something. There's a tail right at the decision-making point, right? There's a fight at a fib. There's a fight at a fib. There's a fight at the fibs. There's fights. Look at the scramble at the fibs. Retracement off the fib, fight off the 1-to-1, big tail at the fib, hits the fib, retraces, hits the fib, reverses, hits the fib, goes up. There's another tail right at fibs. Does that make sense, everybody? You can, only looking at a large chart, see all of those fights happening right at key areas. This is one of the ways to develop trust in the idea that you don't have to trade into a termination condition. So this is really the brilliance of that chili dog trade, of that momentum style trade. We'll look at Ron's too. Oh, maybe not. I delete stuff every now and then. Once you get away from that decision-making point and you have momentum, life gets easier. It gets much easier. Steve knows that. That's how he's able to capitalize. Absolutely beautiful. Absolutely beautiful. I like the way you did it. All right, Paul. This looks familiar. Everything says up, potential to break from a strong bottom. Pull back to support, right inside of triggers, money, money. And I like this exit. I like this exit, guys. Paul says, I don't have to be in every move. I don't have to be in the biggest moves. I don't have to be the first one in or the last one out. But if I capture $300 3 times a day, I'm $250,000 deep into my year. Paul, beautiful trade, great execution. Very nicely done. All right, James with the double up. Everything says up with momentum. James goes up with momentum. Great job, James. Remember, guys, if you don't tell me why you did what you did, I'm going to tell what I see and move on. Momentum, clear path, spike, entry, momentum, absolutely rock star. Jeffrey Dean saw a possible gap theory going on, and it was going to set a limit to sell with seeing both triggers had rolled from a weak top, but chose to do nothing because price had reached support on the large chart. On the small chart, 1-to-1s came into play also, but I think the gap theory won this one because price went north real quick. Maybe I'm overthinking things. Jeffrey Dean, can we talk about what you're overthinking? You want a little insight? Price reached support, every trigger stayed above it. How easy is that? No short trades. Isn't that a rule? Doesn't that remove 100% of the opinion? Price reached support, all my triggers are above. I know, but you said maybe you're overthinking things. Did you have momentum? Yes. Did you have a clear path? No. Screw it. I don't need that. It'll do something. It'll give me my opportunity. Great picture, Jeffrey. Great recognition on the gap theory, too. You know what? That's 2 good gap theory pictures. I'm going to go ahead and steal yours, too. I'm in a pilfering mood today. Mostly just because I wanted to say pilfering. What a fun word. Gap theory saves the day. Great chart there, Jeffrey. Great annotation. Love it. Isn't it crazy that it can be that easy? So this is 2 times people have posted in this room that their rules weren't met and it kept them out of a loser, or that their rules weren't met and they chose not to trade. Big lesson there. Where are you at in the world, Kurt? I will have a beer with anybody. Well, I can't have beer anymore. Pennsylvania? Ha! You better fly to Texas. I don't go to the cold. I've got too much metal in my back. That hurts. Maybe someday. Who knows? Maybe I'll make it up to Pennsylvania one day. All right. This is Ron. Ron says, check it out. And let me do a little a little heads up on this one. Ron's got 30 bars in the same direction here. He knows this market's trending strong to the upside, and he knows that he has a clear path, and he knows that he's cleared trouble. And notice that he waits till he gets above that divergence line. And he's thinking to himself, this still isn't my best look, but when the sellers fight and begin to fail, there's an opportunity there. So this doesn't quite fit the chili dog rules, not quite. But once you're a chart reader, guys, what did we say yesterday? Learn your rules like a scholar so that you can break them like an artist. Nicely done, Ron. All right, Kurt. Oh, is this the one that the market flow didn't get you in? Let's take a look at it. Yeah, they just did you dirty, didn't they? Weak top, perfect gap theory, awesome. And it just didn't really give it. I like your patience. So what I would have been looking for here, and guys, this is a little advanced, and I don't know if it's set up, Kurt. Have you seen John Novak's white bar trade? Have you studied that? So if this is an up bar, you'll get an HVA line right there, right? So when these triggers roll, his white bar trade literally puts you in right here if it comes back. Does that make sense? White bar off of the area. The entry for that white bar trade is the pullback to the fast triggers that have rolled. You're literally anticipating the HVA. It's a little more advanced. But that may have been a way in. Was that crude oil? Let's go to crude oil and build a range chart. You want to? You're the last picture anyway. Let me build a range chart for my crude oil. Dun, 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 dun. Oops, that's the wrong one. A range. Almost there. All right, so we're going to look just for grins and see if it helped. See if there was something there for you. What was the timestamp on that bad boy? Oh, we'll just go back here. We were right around 9:30. So this one, it never even gave you a pullback. Never even gave you a pull. There was zero opportunity there. But that's okay. Sometimes it's fun to go back and look. See if there was something that might have helped, but they didn't give it to you. They were stingy on that one. That's okay. It happens. But it was cool that you were looking for it. It's cool that you're taking these basics and being able to incorporate another chart, get a little extra information, maybe find a way to catch a little bit more. I love it. Love it. All right, so let's do the chart read. Do I have strong triggers? What do you guys think? Newer users, play along. Do I have odds favorable momentum? Do I have separation between the small and large, guys? Give me a Y or an N. Don't be shy. I rarely bite. I don't. Chef, did I have a clear path? Price hadn't reached the area. It cleared the previous. What do you guys think? That was a clear path, though, wasn't it? Absolutely. Did I have areas inside of triggers? If I chose to bypass, no. So let me show you how my brain works, guys. I talk myself through these three things every time I look at a chart. Do I have momentum? Do I have a clear path? Do I have an entry area? I encourage you guys to do the same thing. Let me show you why. Chef said, and Chef, you're on the pedestal now. Chef said, hey, Mark, I don't have momentum. Let me black that out. Hey, Mark, you know what? I do have a clear path. That's kind of cool. But Mark, there wasn't an area inside of triggers. And at this point, in Chef's inner dialogue, he says, dag nabbit, I'm missing 2/3 of my advantages. Mrs. Chef is going to be powerful mad if I take a trade with only 1/3 of my advantages. Guys, the simple process of speaking to yourself in terms of advantages, the simple process of asking yourself those same questions every time. Do I have this? Do I have that? Do I have this? If 2/3 of your answers are no, you probably don't have what you need to take the trade. And guys, there's that gap theory again. Price reached support. The triggers are all the way up here. It may close the gap, but it doesn't mean just jump in at a blue line hoping, right? Gotta have some sort of rules there. All right, Kurt, good top. Not even a trigger pass, Kurt. One line of the trigger. There's a big difference. One line of the trigger. That's it. It takes both lines to get through for the triggers to be through. And then you have odds favorable momentum, absolutely, coming from a strong top. You have a 50-50, that potential to break. You entered right at resistance inside of favorable large triggers. And you got sand in something, or what happened? It's the perfect look. It's the perfect entry. Oh, I see what happened. Hold on. All right, Kurt, you become Exhibit A for this lesson. You ready? Guys, this is common. There's 3 entries that people take, especially when they're newer. The first entry is jumping in right here, afraid that it's going to go without them. If you jump in right here, guys, this is where your stop belongs. This is the fear of missing out. All you've done is you've made sure that you have less room to your target and a bigger jump to your stop, which means bigger losses. This doesn't guarantee a winner. The second entry, and this is the one that Kurt was nice enough to give us. There's his entry. Stop giving me stop signs. And there is where his entry should have been, right below resistance. So guys, what happened is the market was on its way up to his great entry, and before he got it, it head faked him. It gave him that little fluctuation on this tiny chart. And this is where Kurt said, in a pretty loud voice, probably scared his dog, "Holy crap, it's going without me. I better jump into that trade." He let small chart fluctuations fake him out. And the small chart said, "Oh, we're just kidding, Kurt. We'll go back to the mid-band." And Kurt's like, "Damn it, that's too much risk." So now he's out inside of where the market's likely to retrace. He didn't even put the right stop in there because he didn't take the correct entry. The correct entry minimizes risk. What a great example. Thank you for that, Kurt. All the time. All the time. Why did I just do that? You know what I've started doing? And guys, this is me. This isn't, you don't have to do this, but this is me. If I take a loser, instead of trying to re-enter the market, typically, unless I'm 100% sure I know my rules are met, and I'm 100% confident, I take my picture and I go and I review it real quickly. Did I have momentum, path, and entry? Did I do this right? And guys, this will take you 2 seconds. You don't even have to look at the picture. You can go back and look at the chart. Did I have momentum, path, and entry? Shit, I didn't have path. Don't take the next trade. Don't revenge trade it. But Kurt, I know why you did it. Guys, the small chart has fluctuations. Let me give you a little example here. Inside of this one bar that's still printing, every one of these bars, there have been up bars, there have been pushes down, there have been pushes up, there have been pushes down. And guys, if you watch those ticks instead of your entry area and just force it to come to your entry area, I'm not saying this is a trade, but if you get caught up in the noise on the way to your entry, you're likely to make mistakes. Let me get out of that trade because it's indeterminations. And there it is. Odds favorable, clear path, pull back to support right inside of triggers. Small triggers were a full bar away, Kurt. We talked about that lesson yesterday. And then everything rockets up, right? And you didn't have a reason to exit. I like it, quick profits. You didn't have a reason to exit. And then your reversal bar stop eventually hit. Which reversal bar? It wasn't your entry chart reversal bar. And it wasn't your large chart reversal bar. Did you really? All right. I just have to tell you what I see because this is what I do. So the reversal bar marker shows you where it becomes a down bar, right? 2 ticks below. So that means that your exit, unless this just rocketed down, should have been right there. This market went all the way down to the mid band and back up before you got out. Right? So this doesn't agree with what the chart shows. Maybe I don't understand how you're doing it. So if a reversal bar marker is going to take me out, let me buy the market. My stops, even if it's 2 ticks, there's my stop. Right there, 88, right? If this becomes a reversal bar, 2 ticks below it is 2 more reversal bars. I just use that marker. But I'm going to stop giving my money away in determination conditions. And it was NASDAQ, so it may have just been super fast. And the NASDAQ moves extremely fast. I get that. Guys, when I have a weak top, not from the line, these areas are more likely to hold. And very often, the market will continue off to that next key area. Not guaranteed, but it closed the gap, and now it's decision-making time. They'll let you know what they want to do. That's all our pictures. Question mark, how you doing? How you feeling? I know it's only day 2. Let me see who else is new in here. Dima, how are you doing? Chopper, strong silent type. I like it. How you doing? Guys, I want you to remember this classroom is for everybody. You're good? I love it. This classroom is for the experienced. This classroom is for the new. This classroom is for the confident. Oh my gosh, I keep dying here. Let me clean out. Guys, anytime my market cleans or my NinjaTrader crashes, I go to Documents, NinjaTrader 8, double click on Database, and I get rid of cache and tick. And this is all in the user guide. And then I'll go back to NinjaTrader 8 and I'll go to temp and I'll get rid of all my temporary folders or files. And then I'll go to my workspaces and I'll get rid of that recovery. And then I'll reopen. A lot of times that helps. You know, it's funny. It's the same thing every day. It's the same looks. It's the same charts, it's the same patterns, it's the same study, it's the same entries. The only thing that you don't have is a little bit of experience with it. Since I don't have any pictures, I'm going to share with you guys. This is a great way, to get even better. After class, before the next day, guys, go get replay data for whatever market you were trading. And go back and retrade it. Fix your mistakes. Take the trades, right? So, Steve Diego, maybe you hold that trade longer. Kurt, maybe you don't get in on the downtick and you get in on the one at the area. Guys, go fix them. Take the ones you skip. Skip the ones you shouldn't have taken. Take pictures. Bring them to classroom. Guys, this is how you get a month's worth of experience in 2 weeks. You go replay, you fix it, you reinforce your rules. Do it every day until you take the correct trades. You'll be floored at how quick you get to where you want to be. Ron says, way more fun to watch the market while listening to someone talking about the market, like watching a game at the stadium versus home alone. Yeah. Isn't that cool? Gap theory did everything we anticipated it would do. And that's where your sellers tried another push, but they pushed right into support and all the triggers. Guys, you're literally watching the fight between buyers and sellers. You don't have to predict, and you don't have to hope or wish or want or pray. All you have to do is wait for your rules to be met. Let me just go through pictures. Guys, what are the fibs on the large chart for you guys that are new? Your large chart, and this is why the large chart leads the way. Your large chart has 3 time frames worth of fibs on it. It has a 13.2, it has a 21.3, and it has a 5.1. And you'll see them, they look different. The charts that are native to the large chart extend all the way to the right. Your 5.1 chart will be skinny. Your 21 chart will be fat. I don't want you to make the mistake of ranking them. This one's a 21. It's got to be stronger than a 13, which has got to be stronger than a 5. Guys, they all are equal. And you'll see that the 21 stopped the market, that the 5.1 stopped the market, and that the 13 stopped the market. So you will see 3 different areas or 3 different time frames. But remember, lines on a large chart can stop the market. Chef, you just funded 2 accounts? Nice. So took a terrible trade because I had strong triggers. It failed big time. Why aren't you showing it? That looks like a trend trade, was it not? What was wrong with it? Because that looks like damn near the perfect setup. The stop was huge. And then you get momentum and everything says down. You take the first short, I love it, and you get out of trouble. And then you take the next short and you get out of trouble. Then you take the next short, beautiful, and you write it down. $1,500. Just funded 2 accounts. Absolutely amazing. Absolutely amazing, Chef. Nicely done. And Gary will disconnect and reset database and repair the database. He has 0 crashes for the rest of the day. Gary, I like it. That's a good little something for the crew. I try to go faster than that because we're in a classroom, but I'll do exactly what Gary says. If it's just me and I'm not teaching and on time constraints, I'll go through from options and reset or database management, and I'll reset and repair. But you do have to disconnect to do that. So it changes it up a little bit. Chef, congratulations, man. 2 funded accounts. $1,500 a day. That's not so bad. I could live off that, I think. What is that, 30 grand a month? 2,400? Now you're just showing off, Chef. It's bad enough you're a better cook than me. Great job, dude. Yeah, right on, Gary. It does sometimes, doesn't it? Man, we're getting close on the browser version. Should have the trade copier either today or tomorrow is what we're hoping. Browser version is going to be a lot like this one. This is TradingView. And John Novak has written indicators to look just like the ones you're used to, but we can't get dynamic Renko bars on it. So it's a little different. So he found some software that creates pretty cool zones. This is the first one. Chef, I'm glad my class made you this way. One thing you've always had for you is you are a great student. You did the study, you recognized the patterns, and then you committed to them, and then you built your own plan. Yeah, wrong side of the triggers, huh? I get it, though. I get why you did what you did, Chef. You had momentum, your path was clear, it pulled back to support. You got a signal, you got an up bar, you waited for confirmation. The only thing that I can say about this trade, Chef, is that I don't know that your loss makes sense, unless you were below that reversal bar. I could get on board with that one 100%, Chef. 100%. The challenge is you're on the wrong side of the triggers, right? Rule number 3. And once you get to the wrong side of the triggers, things can change. There's no doubt about it, but I get it. You can't be mad about that trade. Oh, you didn't move your stop by accident and it caught you? Yeah, they have cameras in your room. I'm convinced of this. There's cameras in my room somewhere. And they just wait for me to get vulnerable. They wait for me to go outside of my rules, and they make me pay for it. And I don't know. Easier just to follow the rules, I suppose. Let's open the S&P back up. I feel like we're missing some stuff here. Guys, we're getting close to the second break. Nobody's posting pictures. That's okay. I can't say nobody. Definitely a solenoid on your chair. Our last hour, guys, I'm going to ramble as long as I can ramble. But your participation is going to define the longevity of this class. This is what it looks like when your software is running its calculations and finding your fibs. For you guys that are new, what your software is doing right now is it's measuring every up and down, every swing, every move, every high, every low. And it's creating multiple calculations off each and tens of thousands of calculations going back, going forward, synthetic time frames. And it's creating all of these measurements, and then it's weighing and it's sorting. And then from all of that great information, it's creating Fibonacci areas. Whoops, that's still calculating of resistance and support. So your charts, oh man, I crashed it trying to move it during the load process. Damn it all. Can you show me a picture of what it looks like, Chef? I think I know the answer. I think it's because of your market flow overlay. You're running two strategies on one chart, and NinjaTrader's probably trying to make the decision on which one it wants to commit to. And this is a guess. I'm not the techie guy. But are you talking about like on your market flow chart, you get some funky looking gaps? Or on your entry chart? It's because you literally have two separate data inputs. You have Renko bar and market flow bar inputs. And what happens is in order to create the market flow sometimes, there's a gap. And if you look at it, if I'm not mistaken, when the HVA prints, I think there's a gap. When you get the signal, there's a gap. When an HVA prints, maybe there's the gap. It has something to do with the fight between the two, the Rinkos and the market flow. But that one bar probably isn't killing you. Because you're still getting your white bars. You still have your HVA lines. It's just two different bar structures. One of them comes through, and it's an 8 range, right? And then one of them is dynamic Rinko, which is actually 26 ticks, which is much bigger. So you're kind of seeing both, and there's a little bit of technological discrepancy. Again, I'm not the tech guy, but I believe that's what it is. Remember, you can always go, hey, Jason, why? Or send John Novak. Let him be smart. He loves to talk about his babies. Hey, JN, how come this happens? You know what? I'm going to do that right now. I'm going to send it over to him on Skype. I'm going to tell him he needs to come to this room and have a talk with you, Chef. He might be in meetings with programmers, so if he doesn't show up, he's not ignoring you. But we'll see what happens. Hey, Bob B. Good day, brand new. Just got set up. Welcome to the room. What are your next 5 steps? Why 5, Bob? Why 10? Why? So, Bob, have you ever driven 100 miles? How many miles did you get through in the first mile? Just one, right? And if you didn't make it through that first mile, the other 99 are irrelevant. That's how I teach this classroom. Thanks for showing up. Watch this. I'm gonna give you a couple things. I'm gonna show you something. And I wrote this weekend with gentlemen like you in mind. So check this out. We'll do this before I disappear for a minute. So let me give you the rundown, and that's exactly what this document does, and I'm going to drop it in the room as well so that you can have a copy of it. But live, 5 days a week, guys. Bob, we're going to go through. Nexgen will teach you. I am going to repeat incessantly and teach you 3 rules on only 2 charts. This is the high probability trend trade. And a high probability trend trade is a trade that typically wins 70 to 80% of the time. The high probability trend trade is a trade that creates confidence through the memory of success. The high probability trend trade, man, this is the one that teaches you to read your indicators. This is the one that it gives you literacy with the indicators. What are they telling me? So what we do is we discuss the 3 rules for this trade every morning. My first hour, Bob, is talking about the advantage of momentum through strong trigger lines, the advantage of a clear path by not having termination conditions, and the advantage of where to get into the market where it's most likely to continue with the trend. And what I do is I break them down individually. I literally go through strong triggers and I tell you exactly where to find it, and we talk exactly what it looks like. And I teach you exactly how to study it, and I give you every tool you need to be a strong trigger expert. So that's your first mile. And then from there, we do the same thing with termination conditions. And I repeat the process. I give it to you individually. We don't talk about the trade, we talk about the advantage. And once you get momentum and clear path, and it doesn't matter if it's an hour, a day, a week, a month, it doesn't matter. Once you get it, those 2 concepts, that's enough to build a solid trading plan that is consistent, that's profitable. So instead of looking for the next 20 steps, what I want you to do is I want you to commit to becoming a momentum recognition expert, and I want you to commit to being a clear path expert, because once you have that, you have the keys to the kingdom. You'll find your best entry. You'll find your best trade. You'll find the trade that jumps off the page and speaks to you. But until you do, learning this high probability trend trade gives you a trade that embraces the advantages, that has that potential to win 70 to 80% of the time. You recognize them, and you're going to turn those advantages into a trade that builds confidence. And the high probability trend trade, Bob, it's not your only trade. It's not at all you can do with the software. It's your first trade. And once you learn that one trade, if you keep it simple, very focused, give yourself a week to learn just the individual concepts, the possibilities seem endless. So this Word document that I just dropped in the room, it talks about the rules and it shows you where to find them. And then this is maybe your first step. If we were going to break down the first step into smaller first steps, is just understand what it is that you're looking at on your chart. And these come into play on everything. The first one is trigger lines. So when you open a chart, whether it's a large chart or a small chart or a range chart, it doesn't matter. You have small triggers and large triggers, solid lines and dashed lines. And these show up everywhere you look. And it's these trigger lines that we'll use to define momentum. So there's a lesson that goes with using the trigger lines. So you want to be able to recognize those first. And that's all that is what are they? Well, there they are. And then every chart will have areas. And areas are the best of the best. And these show up on large charts and small charts. And this picture just gives them a name and points them out. So anytime a magenta line prints off of a pivot, it's a divergence high. It means there was a loss of momentum. You're going to see red fibs and blue fibs and one-to-ones and mid-bands. And all this is your roadmap. Now I know what I'm looking at. Now I know what these things are. Let's put them together to create a trade. Let's use them to have an advantage, to recognize a pattern. So we go straight to rule 1, strong triggers. And this is a beautiful thing, Bob. I've got one picture to define strength in the market. And it's those small triggers and large triggers. And anytime they split from one another and they're the same color, you have strong triggers. You have momentum. The odds are favorable for the market to go up or down. And then once you're good at that, most people get it in 8 minutes. Then you'll go and you'll study termination conditions a little bit. And you'll study defining your entry. And all of this is in that document for you. So if I had to write the perfect plan for somebody, I would say learn the rules first. Break them down individually. Don't worry about profits. Don't worry about losses. You have a simulator. Get going on the simulator. Practice, make mistakes. But Bob, this classroom is interactive. This classroom is designed to get you where you want to be through feedback. So to get to where you want to be, you're going to have to post pictures in this room. You're going to have to say, hey, Mark, this is what I did, and this is what I saw, and this is where I did it, and this is why I did it. Am I doing it correct? Is there something I could do better? Could I reduce my risk? Could I increase my profit potential? So every time you post in this room, it's a private session with me. The second thing is use the spreadsheet. And the spreadsheet's given to you every day. I give it to you usually 2 or 3 times a day. Very often I steal pictures from you guys in this room to make it an even better study tool. But the first tab is a trade journal. And it actually has a spot for the feedback that you receive in class. You're going to come back and study this so you can start to recognize these patterns. It's got a spot where you can see 50 pictures of momentum and what it looks like when that momentum is gone, and what it looks like to not have anything in the way, and what it looks like to have everything in the way. And then also your entry. Nexgen users were nice enough to give us about 400 pictures of using the software, using the advantages, finding opportunity. When we talk about that high probability trend trade, this is the entry, both long and short, as well as how to manage it in a very mechanical, pragmatic, emotionless fashion. And then pictures of how you may change your management plan. Pictures of patterns that you may see when you begin to recognize these patterns. I've added a couple just today from the pictures that the students have posted in the room. And then there's also a tab where you can build your plans. So, welcome to Nexgen. You're part of the family now. I love that. Let's keep it simple. Let's keep it focused, Bob. So, we've already gone through our 101 session for the most part. That trend trade document that I gave you, Trend Trade Simple, is an awesome starting point. Grab that spreadsheet as well. Get it onto your computer. And because we've already gone through the first hour, in the live section, and let me get you a link for that as well. Every one of these videos, the first hour is exactly the same. Every one of these videos, the first hour, talks about these 3 rules. Every one of those videos teaches you how to study those 3 rules. Every one of those videos tells you where to find those rules. And it's the same video, first hour, every way. No, you're okay. I hope everything went well. So Bob, if you look, and you know what, let me put it right below you. And I'll show you how you can do this. If I pull up, this is what the chat room looks like on my end. I can see all of you cool kids. There's what I'm showing. And here's the chat box. So what I'll do is I'll take that spreadsheet and I literally drop and drag it into the box. You can download it. It'll go to your downloads folder. Or you can click on it and you can drag that file over to an open space or an open file on your computer. And then I also gave you this one in there. And guys, if you don't have this one, steal it. This is the Trend Trade Simple. This is what I just showed you. It describes the indicators, how you're going to use them. It breaks the 3 rules down. It shows you really everything that you need to know about the high probability trend trade. It takes 2 pages to do it. And the one thing that I say every day, Bob, is I promise you everything you need to be successful with the software. The only thing that Nexgen doesn't provide is the experience to recognize the patterns, is the experience to be comfortable taking the trade when it sets up. And one of the things about being a day trader is we all start at this amazing foundation. We all start at this very basic point. And the point to everything that we do, the key to success with everything that we do, let me find it, is building that foundation. Is building that foundation and then growing a little bit each day from that foundation. Not trying to finish the race on the first day, right? Not trying to get the first 10 steps. Let's go through the first step and then the second and the third. And it's just like going through school. I don't know what you do professionally, but when I went to school for an English Lit degree, my first 2 years were basic, boring, remedial garbage. That's what it felt like. But when I got to the classes that mattered, they had built the foundation, and it made my collegiate years easier. So for the brand new users, I'm going to blanket you with very conservative rules, and it's going to feel like I'm telling you to stay out of the market, but I'm not. I want you to learn to respect the rules, to follow the rules, because it increases the likelihood of success, and that likelihood of success is what keeps you around. And then you get better, and you get better, and you get better, and you're going to see people in the room posting trades that aren't high probability trend trades. And you're going to begin to get this desire to be the trade police. Well, if they can do it, I can do it. If they're breaking rules, I'm going to break rules. And the reality is everybody's in a different spot. And you just have to kind of find your spot and then let me work with you to grow it a little bit. Question everything. I encourage it. Don't be afraid to post in the room. Don't be afraid to ask questions. Don't hesitate if you need clarity. I will stop everything I'm doing and make sure that you understand the lesson. I'll use pictures, I'll use explanations, I'll use really crappy analogies because I'm not very good at analogies. But the one thing that I want you to do, and I put this in here, this is for my wife. Give yourself a little grace on this journey. You're brand new. It's okay to be brand new. It's okay to make mistakes. It's okay to have challenges. That's what simulator's for. I want you to make every mistake you could possibly make. And the only thing that I ask is that you have the courage to put it in the room. I'm the warm, fuzzy Novak. I will not beat you up. But give me the opportunity to teach you how to fix any mistakes you're making. Give me the opportunity to teach you how to get better entries, to manage more effectively, to read your charts more efficiently. And together we'll get everywhere that you want to be. So there you go. That was a 7-minute dissertation on the first step. Does it make sense? I know everybody wants to be a day trader on day one. We're going to be chart readers first, and that's what's going to open the door for you. And this high probability trend trade isn't your get rich trade. It's the one that teaches you to see it. So focus on chart reading a little bit. And the second thing I'm pretty adamant about is take a break every now and then. Walk away. And that's what I'm going to do, guys. I'm going to walk away. Oh, before I do, Chef, you posted something, right? Hold on. Yeah, different question, Kurt, but that's awesome that you tried to answer it. Thank you for that. And then John didn't reply to me, which means he's probably in a meeting, Chef. So I'll be back in about a minute. Right on. Hey guys, did you notice that the small triggers were not away from the large triggers, that there wasn't space, that the scissors weren't open? Is anybody surprised that it pushed beyond the lowest point of resistance inside of triggers when rule number 1 isn't met? It is that easy. Bob, and I know you're not sure what I'm talking about. The rule wasn't met. This is what we call avoidable losses, and that's what your rules do for you, is they keep you out of avoidable losses and they keep you committed to high probability trades. So guys, I'll see you in about 5. Go stretch your legs. Here we go, last hour. Remember, you guys make this class amazing. Your questions, your comments, your needs. That's what gives us great YouTube content, guys. Me flapping my gums isn't real exciting for anybody. So let's do this. I'm going to go through some pictures that I have. I'm going to go through some stuff that I've done, that I've seen, that I've built. And one of the things that I want to share, and I love this one. Guys, this is pretty much Nexgen's plan, and this has been it. What we've taught for coming up on 28 years now. Define your termination condition. That's it. We learn how to do that every day. Price reaches an area, triggers stay below. Guess what? You have a termination condition. You have to sit on your hands and see what happens. It's either going to break or it's going to hold. And if it holds, the large triggers roll. And then once it does, there's a lot of ways to get into the market. We teach the high probability trend trade first, but we also teach what's called an HVA trade, and it uses a different chart in these pink and green lines that define high concentrations of buyers and sellers. And once you understand terminations, once you understand trigger lines, once you get good at defining areas, you'll begin defining more areas for entry. And then from there, this is kind of your first shot from a termination condition. And then with everything strong, we just do the mid-band thing. We do the fibs inside of triggers. And we take trend trades. And guys, you will continue to take trend trades over and over until you hit your next area. And in which case, it's either going to roll, you'll start looking for opportunities the other way, or if it breaks, you're just going to start looking for trend trades again. And it's just repeat the process. And it's been the same thing for as long as I can remember. Even when I wasn't involved with Nexgen, it was the same thing, guys. This is the trend trade from 2004. This is a momentum trade from 2004. I think I have another one in here. There we go. This is an edge trade, pretty much an HVA trade from 2004, guys, 21 years old. And we're still teaching the same thing. And the patterns keep repeating over and over. So know that it doesn't have to be complicated. It doesn't have to be a big deal. It doesn't have to be 1,000 rules and 1,000,000 charts, guys. You just got to learn a couple patterns. And this is one of my favorites. This is the Mark Novak story. For those of you that don't know, I started with Nexgen after my second spine fusion. It took me out of the restaurant industry, which I had been in for nearly 30 years. I enjoyed it. And my brother said, all right, you're broken. You got to find something not so hard on the body. And I got my software and I was like, man, this looks like fun. And all I could think is I'm going to be rich. I'm going to buy Corvettes and I am going to have mansions and probably an island. And I'm going to train a monkey to bring me pina coladas. And man, I couldn't wait. And then I realized, and I don't think hard's the right word, but I realized that I was going to have to do some work. I had to learn some stuff, and I had to take some pictures, and I had to get some feedback. And right about 30 days, I decided that it was fun. I don't know what I'm doing, but I'm getting lucky, and I wasn't participating in class. My brother used to teach the class, and I wasn't participating, and I wasn't taking pictures because, you know, I remember everything. And I didn't even write down a plan. I didn't even have a plan. Guys, I give a plan every day in this room. There's no reason not to have one. And right at about 30 days in, I said to myself, you know what? I'm good at this. I'm good. People like me. Doggone it. And I lost $5,000 in just under 3 hours. This was the days before prop firms. And I lost $5,000 almost instantly, and I had no idea why. The only thing I knew is that I hated trading, and I hated Nexgen, and I hated my brother. But during all of this, I knew that it worked, and I saw people doing great with it, but I was so mad, and I got knocked down to the I don't know shit stage, and I'm not afraid to say shit because it's exactly what it is. And guys, this is where, right here, I don't know anything stage. This is where everybody makes a decision. This is where people say to themselves, you know what? And this is what I said. My brother said that I should learn the rules, that I should participate in class, that I should take those pictures and study them. I'm going to try it his way instead of my way. I'm going to try and do it the Nexgen way, the way people have been finding success for decades. And that's when I started moving up. And right about here where it actually made sense, I believed so much in the rules that I started working for Nexgen. I started teaching these rules to everybody. And you get to that I did it point. You will get to that I did it point. But the more you stray from simplicity, the more you break away from chart reads and embrace emotion, the longer it's going to take you to get there. So I love this picture. I think this is a fun picture because it's so real for so many people. And I'm not trying to scare anybody with this. And the reality is that you can bypass all of this. You can bypass every bit of this, and you can start right here. You can start without the pain of blown accounts, and you can start with an awesome plan, and you can start without making all the mistakes that I made and so many other people made. You've got a plan that starts you right here if you choose to follow it. And that's up to you. Only you can make that choice. What else? What's the market doing? We have what can only be considered a strong trending market now. 30 plus bars without a reversal bar. Nothing in the way until 79.78. Pretty cool. Uh-oh, that's my only open chart. I just went to my untitled one. Sorry about that. It wouldn't let you in. That one was into the termination, wasn't it? Probably some chili doggers making some money up there. Probably some of those just jump in guys making a buck or two on the way up. What else can I share with you guys? How about this one? I love this one. Nexgen has had clients for 28 years. And there's a lot of them that are still around using Nexgen. This was written out when our pros room started. And the pros room was this room back in the day. And there was a pros room and there was a beginner's room. And in order to get out of the beginner's room, you had to prove proficiency. You had to share charts. You had to be able to read them and prove that you wouldn't be a distraction to the people that were doing this for a career. And this gentleman was in the pros room, and he knew that rules were the cornerstone for everything. He knew that rules are what he had to live and die by to find success. Every experienced trader will tell you that. Every experienced trader will show you the exact same trades over and over, and you'll rarely see a lot of variation. It's the same thing. So he wrote out the most common rules breaking that he was experiencing, or he saw people experiencing, and he gave himself a penalty box, a timeout. And anytime he violated one of these, it had a different value. So the more severe the rule break, the longer break he had to take from the market. He had to walk away. He had to rethink things. And I love this one because the first one is missing a good entry and entering late. And that's one of the reasons why we talk about it just incessantly every day. We focus on great entries every day. And then management comes into play. And then bad decisions breaking rules comes into play. So this was a pretty good one. Write your own. What's your thing? Everybody has a thing. Guys, what do you want to talk about? I need help here. I'm all out. I'm going to mute. And since there don't seem to be any pictures being posted, I am going to